Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, yesterday the market was full of doves after the Federal Reserve Chairman Jerome Powell said interest rates are just below the range of estimates of neutral. Some economists don't see a major difference from the previous remarks. The key difference could be between the range of estimates on the neutral and the median expectations of a neutral rate that is neither stimulative or restrictive. Economists in the US are taking a second look at the Federal Reserve Chairman's speech from Wednesday and may now be considering whether the dovish read from Powell was an overreaction. At the Economic Club of New York, Powell said that interest rates are just below, as I mentioned before, what he considered as neutral. So, from a technical point though, the market is still questioning from the Aussie is whether the rally is sustainable. But at this stage, we haven't seen the market break down and it's still holding towards the top side of the range and therefore could see one more test towards 45 to 75. But if it was an overreaction in the market of misreading what Fed Jerome Powell said, then we could see further losses coming back into the Australian dollar. But technically, we don't have that support to hold that view. So therefore, I'm holding a neutral outlook for the time being and see if the market can close under 72.75. If so, then I'll be looking down towards the next target of 72.45. So with the euro hardly moving overnight, the dollar index did stage a mild recovery from 96.52 to 96.91, but still at present hasn't confirmed the outside range days to the bullish for the euro and bearish for the US dollar. Without the signals coming through, could easily see the market turn around and stage another decline. Now, at the moment, the market is looking at the G20 summit, which starts today, but it doesn't look like it's starting off that well after the headlines this morning said that President Trump had cancelled a meeting with Vladimir Putin after citing Ukraine crisis. Now, Donald Trump has cancelled the planned meeting in Russian and said that he was concerned when he's twittering from his from Air Force One to reveal his decision took Moscow by surprise, and saying that he was abruptly cancelled because the Russian president views from Trump's side that he disapproves of Moscow's treatment on the Ukraine. Nevertheless, the fact is that we are looking for a possible down test if the dollar does continue its overnight strength. Immediate targets at 113.45 and then down towards 112.60 to 111.60.80 as an objective. Resistance is still around 114.10 to 65. The dollar-yen is a bit weaker overnight, and as you can see, the market is still very much holding to a bearish case, and therefore I'm looking down towards 112.15 as a target, with the resistance at this stage seen around 114.20 as a cap. The pound didn't make any significant moves overnight, but a little bit weaker after posting another 127.54. Still, the market is looking for the outcome of the Brexit, which is on December the 11th, but there is still concerns that whether or not the market will or will not continue in terms of a hard or soft landing. The gold outlook still remains, of course, as a safe haven demand. It still holds above 1,220. At present, we could see further gains and look towards the region of 33 to 36 and reassess from there. And wrapping up with oil, the market rallied 1% overnight. And at this stage, it's still looking for a further gain, possibly after taking a false break to the downside at 49.80. A break above 52.55 would give further strength, an indication for a rally up to $55 as a target. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day and a great start to the new weekend.